as we looked over the whole 17-year period, it's really the compounders that have delivered, driven a lot of that really good performance of the fund. If I talk about a couple, so Domino's has been a great stock for us. We bought Domino's back in about 2004. Fund kicked off in 2003, but bought it in 2004 at $2. Domino's today is about $80. So it's which is quite interesting in that it's a pizza, fundamentally a pizza business, but it's gone up 40 times. Now that's compounding. That's great value creation. And fundamentally what they did was look at what they were, the fantastic management team. Management team is very, very good. They were like the number 3 pizza operator in Australia at the time, and really just set about delivering, focused on what they were in terms of a delivery company, making sure that they can get fresh piping hot pizza to people as quickly as possible, driving the technology behind that. And they have just really invested extremely well in the technology, and grown the business very significantly. So become the number 1 player in Australia, but then expanded into Europe, into Japan. In Europe, they're now in Germany, France, Benelux, Denmark, and a range of countries, and really delivered very strong. They've stuck to their knitting. They're stuck to their business. They've stuck to their knitting, and really improved profitability and driven, very strong sort of compounding growth. So, and all of that's come through in the share price. As I said, it's gone from $2 up to $80.
And it's
the other one,
active position in your fund today, correct?
It would be the highest active position at the moment. Yeah.
Interesting.
So, and that's a lot of it's just grown over that. It wouldn't have been the highest back in 2004, but it's really grown in the portfolio just naturally as the very strong performance. And over that period, it's grown very significantly as you highlight the highest active position. But I'm continually sort of trimming it just to make sure it doesn't get too big within the portfolio. So I've probably sold multiples of what we've invested initially, and it's still the biggest position in the portfolio. Second one would be Seek, which has also been, and once again, if you look at Domino's, high return business, so very high return on invested capital, and an ability to reinvest and generate a high rate of return, which ensures earnings upgrades, and it also ensures sort of genuine value creation. Seek also, similarly, high returning business, can reinvest it at a high rate. So Seek, we also invested initially back in about 2004. I still own today, and that was also about $2 back in 2004, and today it's about $20. So that's a 10-bagger over that period. Same thing, very high quality management team, and I think both. I guess the consistent thing of both management teams is that they think long term. So we love to back a management team that thinks long term as well. We don't get too caught up in, a good half or a bad half, or, we want a company thinking out at least 5 years, because that's how they're going to create value. That to us is a good management team, and that's really how you create value. So we want them thinking long term, and we are very happy to back those long term strategic thinkers as well. And that's exactly what Seek did. So they've become the dominant online sort of recruitment site in Australia. And then once you get to that size, it's a very much a sort of a virtuous circle or cycle as well, because now in Australia, if you're a person looking for employment, you got to go to Seek, because that's where all the employers are. And if you're an employer, if you're someone looking for an employee, you got to go to Seek, because that's where all the employee. So it becomes a very strong market, a very strong virtuous circle. And Seek similarly have done the same thing. So very strong in Australia, have expanded around the world. They own Zhaopin in China, and you just think about the potential out of China. Now, in China, they're number one or number two, depending upon the market, depending upon the individual city. But, you know, what a fantastic result, and, you know, the very strong position, very strong position in China, and we're seeing, you know, that's going to be extremely valuable business through time as well. So same thing, good, strong management team, good industry structure, high returning business. But the other thing we look for in companies like, in tech companies like Seek is, we sort of also want them investing. I think when the management team are thinking about the long term, it means that they are investing. So they could, if Seek wanted to, they could actually increase their profits very substantially right now by just pulling back a lot of their investments. Now that would be good for profits today, but it would be bad for their sort of market position and their profits in 5 years' time. So once again, you know, the management think long term. We want to back that long-term thinkers, and that's going to make Seek an even more valuable business in 5 years than it is today. The other thing we really love about Seek is that same strategic thought, not just because they've always had a lot of pressure from maybe, if I can say, sort of shorter term investors saying, well, like, I really like this recruitment site, but I don't like this online learning model, you know. And in the early days, it really wasn't generating a lot of profits, but to us, it was such a good strategic fit and a really long-term sort of proposition, because I guess the argument is that, you know, typically, you know, maybe 20 years ago or 30 years ago, people were thinking, well, you know, a lot of people had a job for life. You know, they'd start with a firm and they'd go right through. And I think today, because of technology, because of disruption, because of COVID, a lot of industries will come and go, and that sort of industry creation and destruction is probably going to happen a lot more quickly. So what was maybe you know, one revenue source 20 or 30 years ago is now, you know, someone will change jobs probably at least 10 times. So that's each time, that's multiplied by 10, the revenue source for someone like Seek. But the other beauty, because of that, because it's much more disruptive, what's likely to happen is that someone will be in an industry, that industry will get destroyed, or they've got to retrain. So while we might have gone to school and university, and that was our learning, and then we just started the workforce, you know, and as life expectancy has got a lot longer, you know, if we're going to live to 100 years of age now, you can't, the same model is not applicable. You can't just go university, then work now till you're 85 and then retire at 85. You're probably going to have to, you'll do your initial study, you'll learn how to learn, you'll start your work, then that job, maybe that industry gets disrupted or destroyed. You have to then retrain for a new industry or retrain for a better position. And I think increasingly the future looks like working and maybe going between work and study a lot more, retraining a lot more. I think the young ones understand this. The young ones understand they're not going to probably have a job for life. They're going to have multiple jobs in multiple industries and need to retrain multiple times. So the Seek model of an online recruitment website and online learning is going to be fantastic, because they can actually integrate the two. And, you know, we will need to retrain. And actually COVID, if anything, has probably shown us that that's even more likely. And actually making sure, so even if your industry doesn't get destroyed or you know, change significantly or disrupted, if you know, it's a great model for just looking at other opportunities within your industry. So, you know, Seek will go, well, you're here. If you want to get here, these are the courses you need to do to have the skills to get to that higher level. So it's a highly sort of integrated model. And I just think it's perfectly suited for, you know, where the world that we're heading into.